네, 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 간밤에 뉴욕 증시 상황을 아주 짧게 좀 전달을 해드렸는데요. 좀 낙폭이 컸던 IT주들 중심으로 좀 올라와 주는 모습을 보였는데 메타, 그러니까 예전에 페이스북이죠. 메타의 약진이 좀 두드러진 하루였다 이야기를 좀 드렸습니다. 관련돼서 현재 월가에서는 뉴욕 증시 상황을 어떻게 진단하고 있는지 그 내용을 들어볼 텐데요. 지금 바로 만나보시죠.
So let's talk about now how the market responded after this Fed rate hike that we had, where we had a 25 basis point rate hike. Previous to this, and the last time we talked was right in front of the rate hike, and we looked at the market was pretty much negative sentiment. Allegedly, people were selling out of their positions in that. We can see some of that. We've seen some of that. Now we have the rate hike and what happened. Well, let's look at one thing. Let's start and look at a couple things first of all. First, let's look at volume. So this is a chart of cumulative volume of NASDAQ on top. So as the line on top goes up, there's more and more cumulative volume going on. It's a constant adding of volume. So over time, this chart has a significant upward bias. The bottom clip of this chart is the NASDAQ price itself. So what we could see back in November, see how the market kept on going higher and volume slowed, started to come off. So what was happening is as we went higher, more and more participants were backing out of the market. Okay, now we turn around and we see the top in the market at the end of the year and then a complete breakdown. And at the beginning, we saw a complete collapse in volume. So we lost participants in the market. We had people that basically had their positions where they were long and they were now at a loss or underwater, and volume really slowed down. Then the interesting thing is what happened here is from the end of January, which was our first real capitulation down there, and we drove a little bit lower in the NASDAQ. Volume didn't keep collapsing. It started to stay relatively stable. And now what we can see is off this Fed rate hike, we've had a substantial jump in volume. So I think that's a positive sign. I don't necessarily want to look at that just by itself, but I want to think about that and understand the fact that we're seeing buyers now after the Fed move. And a lot of times I've talked about when we have significant events, and we've looked at those before, economic events, it's the most difficult thing to do is to buy right in front of it, right in front of the invasion, basically, of Russia into Ukraine, right in front of the first Fed rate hike. Those are difficult decisions to make, but that's when the biggest market moves have tended to occur. Now let's look at what also happened in terms of price after that period. So this is a chart that goes back to 1970. And what we say here is the NASDAQ makes a new 52-week low. So it makes a new low on a rolling one-year basis and then turns around and goes up 2.5% 2 consecutive days in a row. So we've gone down and now we have this really sharp rally 2 consecutive days in a row. How many times has this occurred? Only 5 other times, basically. And these have all been at bottoms with the exception of this one time in 2007. So 4 out of the 5 occurrences have corresponded to basically lows in the market before we had a significant rally. One other thing that we can look at that happened because of the move after the rate hike is we had 4 really strong days in a week, 4 consecutive days actually, that we rallied 1% or more in the S&P 500. And we had that this year, and we've had that in 1970, 74, 82, and 2020. And what we've seen this time is that 1970, we were lower 1 month out. but then we were higher after that. But the observation here is that 6 months out, we're substantially higher, and 12 months out, we're substantially higher. So what we're seeing here is that these lows and then the response off these lows are indicative of future price gains down the road, say 3 to 6 months to 1 year out. Another example we've looked at, Ned Davis has done this analysis, where we have a situation where 90% of all the stocks got above their 10-day moving average. So what happens typically is that some stocks are going up, some stocks are going down, some industries are in favor, some industries and sectors are out of favor. But there are conditions that occur when the whole stock market goes up. And that's occurred 36 times since 1982. And 35 of those times, the market's higher 1 year out. So these occurrences are fairly rare. There was this one same occurrence, basically again back in 2007, where that didn't really pan out. But all these other occurrences, 97% of the time, we've been higher 1 year out than where we were when we had that occurrence. Finally, another analysis that we did. So let's say 55% of all stocks, NASDAQ stocks, are below their 200-day moving average. So what probably is occurring is that we're in a downtrend. 55% of those stocks, so more than half, okay? And yet, what we have is within that downtrend, 95% of the stocks get above their 200-day or their 20-day moving average. So what we have is a downtrend going and then a sharp reversal where of the NASDAQ 100, 95% of the stocks get above their short-term 20-day moving average. That's only occurred 3 other times before now. 2008 at the bottom, end of 2018, right after COVID, and right now. So what we're seeing here, this is just another example of a market that's been in a price decline, and we've had huge declines. We've had Shopify go from $1,500 to almost $500 a share. So we went down to $520. We've had significant declines in quality stocks and quality technology stocks. And I want to go back to one other example that we looked at before. Remember, we talked about this is going right into the Fed rate hike, where we said 99% of the stocks were above their 50-day moving average. So 91% of the stocks are below their 50-day moving average. That's an incredibly low number. And that's one of the reasons I think that we saw such good price action coming after the Fed move. So it's one of those buy the rumor, sell the fact, or sell the rumor, buy the fact kind of thought processes where we get really worried, then when it actually happens, the Fed rate hike happens, we go higher. Now, why did we go up so much? Well, I think we got to step back and realize what the calendar was that occurred when the Fed made that rate decision. That rate decision was on a Wednesday. We had a quarterly option expiration where options on the S&P, options on the NASDAQ, options on different sectors, options on individual stocks, it's called a triple witching, where all those 3 option series expired on the same day. And going into that option expiration, don't forget, for the quarter, the market was going down fairly significantly. And I think what happened is a lot of people that bought puts got exercised on those puts. And they either took their stock away because they were purchasing puts because they owned the stock, or they were purchasing puts because they were bearish on the market. And now all of a sudden, everybody's exercised on their puts. Well, that takes away a ton of people that had long exposure into the market, because that takes away or gets them short the market. And then after that Friday, which was 2 days after the Fed rate hike, that following week we rallied like crazy. So is it the fact that we rally like crazy because we're all putting money to work into the market, or is it because we squeezed a lot of those shorts from the option to put expirations that were exercised into the market on that Friday after the Fed rate hike? We'll only know that over the next 2 weeks, but that's something that I think about in the back of my mind. So I want to color those previous observations, which I still think have great 6-month and 12-month characteristics to them. I want to be careful and not think about we're going straight up from here.